afternoon, everybody, and welcome. We have an amazing panel today about NFTs as an asset class. I'm Tracy Wang. I'm a senior reporter with CoinDesk. And I will quickly introduce our wonderful speakers. First, we have Kyle Samani, a partner at Multicoin Capital based here in Austin. So he is truly our resident Solana whale today. We also have Dan Patterson, who is a general partner at Sfermion, a NFT investment firm. And Sfermion closed a $100 million NFT fund last November, I believe. So great job, impeccable timing, truly. And lastly, we have 0xB1, who is the founder of Photo Finance and also a mega mutant ape connoisseur. And he is actually here today without his demon ape filter. So thank you for joining us. All right, so we have a lot of probably whales here in the audience today. And this panel will really be talking about NFTs as they relate to the institutional investor. So the first question is just, why should institutions even care about NFTs? We can start with, I guess, Kyle.
Okay. Sure. So why should institutions care about NFTs? People like to own things. People develop emotional connections to physical objects. It is therefore reasonable to impute that people will also care about digital objects. And if people genuinely want that, then institutions should want to understand that and invest accordingly. Should institutions own, I don't know, apes or DeGods or Azukis or OK Bears? I'm not going to make that argument today. Maybe I will in the future. But digital ownership is a thing, and people should care about that.
Yeah, we kind of take the view that NFTs as like a technological primitive are going to eat most asset classes. Just like crypto's kind of eaten the financial monetary role, NFTs represent all of your digital goods in this quote unquote metaverse, mirror world, whatever you want to call it. NFTs allow people to have digitally native property rights in this future world, right? Are accelerated by COVID, but our online personalities, our lives are just becoming an ever greater and greater piece of our lives in general. So, you look at all around the world, whether it's screen time, internet ubiquity, technological immersion, we see all these trends pointing in the same direction. And, whether it's just art and collectibles and silly stuff today, in the future, it's going to be all sorts of financial contracts, IP, ticketing, realty, deeds, all that sort of stuff. So, get smart on it now is kind of our point.
Yeah, I think people often forget that NFTs are a technology, right? They're not just art, they're not just PFPs, they're actually a type of contract that represents something that is non-fungible, right? That can't be replicated or is unique from something else. And I think that people forget that NFTs even today are being used as many different forms of financial derivatives. The majority of DeFi liquidity is held in NFTs like USDC and ETH via Uniswap v3. That is a whole system built on NFTs. And it's not just art, it's not just PFPs. And I think that what we've seen is this evolution toward accepting the technology for both art, collectibles, and anything that can be this utility-based derivative. So there's many different things projects on Solana and ETH which are using NFTs as in-game items, right? Where things can cross between worlds. I think that's incredibly interesting. But people, I think institutions should be most interested because it's like a new evolution of this class of products that they can be early in. They might have missed the first crypto boat, but whether it's land deeds or whether it's in-game items or upending different forms of digital economies, the world is just evolving.
Thank you. I want to talk a little bit more about just the current market environment. So we are now, a couple months into a bear market, and institutions are looking at their portfolios, and if they have held Bitcoin, Ethereum, maybe some alts, they're probably down, at least 50% from all-time highs. And I think there's an argument or a narrative that NFTs, which are fueled by, right now, primarily retail speculation, but there can be real utility, like you just mentioned. Is there a role that NFTs can play in terms of softening the bear market and perhaps being a sector within crypto that can actually outperform if we are headed towards a pretty severe bear market?
I think one of the silver linings is, and our research desk looks into this because this is a question we get a good amount. And right now we're still less correlated than traditional crypto with the broader macro cycle. In certain cases that means we're just down more. I think it's still an extremely early asset class, right? So given that these are unique assets instead of fungible, there's more liquidity or illiquidity in that type of asset class. So you're going to see some disjointing there from kind of the broader crypto cycles, I think, especially in the near term. But we're in a little bit of uncharted waters. First time we've had a real kind of macro correction/recession timed with kind of crypto pullback as well. So I think it's a little bit anybody's guess right now. We're still extremely early, but I think just like we saw kind of in previous crypto cycles, while this correlation is still extremely low, kind of anything can happen, and NFTs are an interesting place to kind of store Ethereum or capital in the near term, I think. We're also seeing a lot of projects pop up that are trying to deal with that illiquidity during, even before the bear market came or the crypto winter. And I think that gives something much greater to the prospect of holding these art pieces or traditional PFPs through the down cycle. You see things like Arcade, JPEG, NFTFi. People are willing to lend against these relatively illiquid JPEGs because they know at low loan to values, they're still a good, or there's a large enough demand for them to be safe. And that's almost a much more interesting concept than just trying to get liquidity on random, altcoins that are in the, bottom 1,000 market cap. You end up, whether it's cyber brokers, Bored Apes, CryptoPunks, there's immense liquidity that's willing to lend against these things, and that's something that a lot of other forms of alts don't have in down markets. So you have the ability to do things with these assets while generally the market's down. You might not get that with your traditional altcoin.
I generally think that it's hard to generalize across all NFTs because you're just seeing the proliferation and expansion of like all the little like sub-verticals. So like PFPs is like one sub-vertical, but there's all the game assets, and then there's all the, like new decentralized Disney-like things that are launching and whatever else there is. So I generally kind of, instead of generalizing to all NFTs, I would try and focus on a kind of vertical by vertical basis, and in some cases even like community by community basis. And I think that those cycles will be basically completely uncorrelated to like broader crypto and broader macro. Not for any structural reason other than each market cap is so small that like the total dollars needed to move the price up or down is just like irrelevant relative to all other markets. So it like can be uncorrelated for simple math reasons.
Are there any particular sectors within NFTs that you feel like would be uncorrelated?
I kind of think all of them, generally speaking, will be pretty close to zero correlation just because like the market caps are small enough. So market caps, you have to get correlations as market caps get bigger because it's just like dollar flow in and out of an asset class. But like if the whole asset class is worth $2 billion, it just like doesn't matter. Like, dollar flows are so small that the correlations are zero. The thing that we're kind of spending our time thinking about is which types of experiences can be built in a crypto native way that like really get people to build that emotional connection with those assets. There's a lot of experimentation happening in music NFTs. There's a lot of these things that are trying to be pseudo-decentralized Disney kind of things. There's things like nouns, which are kind of, I guess, in the bucket, whatever. There's a whole bunch of experiments being run. What we're trying to make sense of is like, what are the consumer behaviors you unlock? How do you find, what are the mechanisms to get the good product market fit? And there's a bunch of those, I think, will over the next 12 months be realized, and you'll see a bunch of, I think, success stories actually on like a community by community basis or whatever.
Yeah, and just one other point. At the end of these days, these aren't pure like financial assets, right? Like I can own a plot of land in crypto voxels next to my friend, and that has a huge amount of value to me outside of just what I can sell it for on the secondary market, right? So whether it's a piece of art that you love and is hanging in your wall and you don't want to get rid of, or it's an early NFT of a card that you collected because it's one you used to own, like these are emotional, social signaling assets, right? If you have it, if you've had it as your PFP for the last year or 2 years, you've built an identity around that asset. So there's stickiness in that sense that it's more than just a purely monetary good as well.
Yeah, and it takes time, right? Like projects take time to build out their technology, metaverses or games take even longer, not just to build, but then to have a community around them that's gonna wanna use them. So I think that having a land next to your friend is a great example because that might mean something to you right now, but it might not to others. But 2 or 3 years down the line, some big company wants to have multiple plots next to each other to build out something bigger than they can on a single plot. The value could exponentially increase in a relatively different way than looking at traditional cryptos, because you have this very specific situation where someone wants to take advantage of, like Visa buying a CryptoPunk, or whoever, Arizona using a Bored Ape as marketing dollars. There's just all these kind of unique use cases, I think, and potential areas that are just not beta. It's going to be very unknown.
I'm curious also, for the institution, Kyle, you mentioned that a lot of these NFT-related projects are small market cap, but if somebody wanted to get exposure to NFTs at scale, what is like the best way to do that? Within the NFT ecosystem, there's just so many different ways to get exposure to NFTs without directly minting projects yourself. You can be invested in layer 1 ecosystems like Ethereum or Solana. You can invest in individual protocols or marketplaces, infrastructure investments, funds like Sfermion. There's just, what do you think is the best way? And I think it'll be interesting to get different perspectives here based off of your different backgrounds.
Well, now we have a great product that we can get easy exposure to, right?
Right. Well, so we just launched Index a few days ago with Bitwise and Mapball and some metaverse stuff, but it's not an NFT-focused product, although there's some NFT stuff in there. I think the question of how do you get exposure to NFTs, the analogous question is how do you get exposure to stablecoins? If you're going to go long stablecoins, and the answer is, I don't know, invest in Circle or Curve or Saber. Those are kind of the right things to go long stablecoins. Obviously, no one wants to buy USDC and you're not going to make any money, right? So in NFTs, I kind of think of a similar class of questions. So what's the infrastructure that benefits as people create more NFTs? And so there's a few ways to do it. You can invest in things like Arweave, Render, Metaplex, Rarible. OpenSea doesn't have a token, but OpenSea, Magic Eden doesn't have a token. But all of those kinds of things are probably the right way to go long NFTs.
Yeah, I think it's a tough sell to go out and say you need to buy X or Y kind of project that's launched. For sure, there's a great number of businesses and private entities kind of building in the space, whether it's infrastructure, marketplaces, lending platforms, games, virtual worlds, kind of all across the stack. I think, I could say, come talk to me after, but it's at the end of the day, it's tough at scale, I think, because the market's just so new. So I think, still the private markets are probably the place to be.
Yeah, I would say that private market investments for infrastructure or the marketplaces, or if in the cases where there are tokens, you can buy them and go long. I would say, though, that if you open up your thought process on what it means to have exposure to NFTs, just like Kyle's example of having exposure to stablecoins, investing in Curve, I think that analog can be very interesting. So there's a bunch of different, I think, opportunities right now in the market. And just to give some examples of how wide that array is, you could invest in kind of a floor collection of something that would track a general collection on NFTX. They have ERC20 tokens that rise and fall with the floor of that asset class. There's a bunch of different companies working on NFT perps right now, which won't actually have true underlying exposure to the material asset, but will just track in a similar way that FTX perps work. There's a bunch of different examples of these things where you can either take exposure to a larger collection without having actual exposure to the material assets, and then there's also I think good opportunities to, similar to the Curve example, you could provide ETH liquidity to BenDAO or to NFTFi and provide liquidity to these platforms that are then lending out against NFTs at very, very low LTVs that are, algorithmically tracked. So if you're lending ETH and at 1/3 of a floor price, even if that lender defaults, you're earning 20% on what you're lending, and then they are very good about turning over those assets if there are defaults. I think that we've seen 7 or 8 punk defaults on the JPEG platform in the last 2 weeks, and all of them have sold for greater than 120% of what the lending, what the principal lending value was. So the lenders are not just making interest rate; they're making a lot more money, and I think that that's very, very different from the type of lending that we see on Aave or any of the. And I love people that lend on Aave. I think it's great and it's needed infrastructure, but there's a lot greater opportunity for seemingly not as much risk when you're, lending ETH against these NFTs in a structured way, which has become a very big thing. I think that we'll start to see a lot more of it as well.
Yeah, definitely. I feel like I agree that the NFT derivative space is pretty nascent and could really address the issue about scale. Now let's pivot the conversation to more about where NFTs are going in the future. And so you three are all, pretty involved in the NFT world. What are the most exciting projects that you're seeing? So in the past year, it's crazy to think about how Bored Apes, I think they minted around this time in 2021, and they've just done so much in the past year. Some other NFT adjacent projects have to do with, gaming, Axie Infinity, music NFTs, NFT projects launching tokens like ApeCoin, NFTs as yield-bearing assets, fractionalization, and then I think the NFT project getting the most hype right now is Goblins. So what are the most exciting things that you're kind of looking at right now?
I think that the most exciting things to me are the non-PFP projects or the PFP adjacent things. So we'll see what happens with the Bored Ape other side metaverse. That might be interesting, but I think that projects or communities that are building games or building some IP structure around assets that they already have. I'm sure everyone saw Jenkins the Valet. He's a friend. They raised a huge round from A16Z. They're building out content and storylines around people's assets. That's a really interesting kind of evolution of not just the PFP space, but what you can do with them. I also think that GameFi and, as I said, in-game items before is huge, and then further kind of financial derivatives and things that we don't think about as NFTs, but again, like the Uniswap example, our DeFi platform, Fodal, uses NFTs as long and short positions using other DeFi building blocks. So I think that as we see more types of companies using NFTs as a core piece of their technology, not just for art-based assets, we'll start to see a lot more growth in the space. So people are launching utility for PFPs and for other art projects, and then you have kind of everything else in my mind.
Yeah, I think there's a handful or a very solid amount of different kind of verticals that you can look at and get excited about, whether it's fashion or game items or real assets, things like that, financial deeds and things. I think one area we're particularly excited about is kind of the social identity layer. Like, what do NFTs allow you to do through attestation, on-chain credentialing? What does the Web 2.5 social media look like, where I can own my data and actually monetize it? Kind of is one of that original kind of theses behind crypto in general, right? Is we're going to kind of flip this Web 2 monetization model. I think we're finally seeing that happen through NFTs, right? Whether it's data cookies as NFTs, or I can actually make a LinkedIn attestation to your profile that then means something, and then that helps me future onboard into a DAO because I could only have acquired that through going through XYZ process. What does it mean to merge kind of the Web 2 social graph of the Spotify, the LinkedIn, the Twitter, the YouTubes with your Web 3 identity that is your hop, that is your Aave credentials, that are your I worked for XYZ DAO. What does the future of kind of work and hiring look like once that type of attestation is on chain? So I think that's going to just be kind of garden that all this different stuff is going to flourish from, I think, once we kind of get that settled.
I think where I spend most of my time today is thinking about creator monetization. Right, artists are a whole bunch of experience being run in music right now. But Instagram they have a beta of their NFT thing. TikTok's did a beta of some NFT thing like a year ago. There's a whole bunch of new socially, platformy, consumery things launching that look like Instagram, look like TikTok, look like OnlyFans, look like Twitch. And broadly speaking, all of these things are just trying to run experiments and helping creators figure out new ways to make money. Attention is the most scarce commodity on the internet, and these creators and influencers have people's attention, and they are generally poorly monetizing that. And NFTs are probably the most interesting experiment in broad-based changing kind of money flows over the internet in a while. So we're spending a lot of our time on that. And so looking at a lot of consumer products, consumer social networks, music NFTs, all of that stuff, that's kind of occupying my brain space.
Interesting. I also know, Kyle, you mentioned that Multicoin has launched a metaverse index fund in partnership with Matt Ball and Bitwise. And I think one of the hottest segments in terms of VC capital is the metaverse, and it's very abstract, and so is gaming, is NFTs part of that? And so just to dig a little bit deeper into what exactly the metaverse is and how NFTs will play a role, what are you most excited about in terms of how will the metaverse take shape, and what roles will NFTs have in that?
I pray that the metaverse runs on crypto rails and not on Facebook rails. That would be, that's very important, really the most important thing. Beyond that, hard to know how it takes shape. This is cliche, but gaming is probably generally the right vector. When you put people in 3D spaces and then tell them to do stuff, there's been a lot of experiments of this over the last few years, PlayStation Home being probably the most notable one that completely flopped because they were like, hey, it's like a 3D space with your friends, and then no one did anything. CEO of Epic Games, Tim Sweeney, has said that metaverses are stupid because people want to do stuff online together. So play Fortnite being kind of the obvious example. And Fortnite is probably going to evolve into some sort of metaverse thing. Obviously, his comments are intentionally, are pointed for that reason. So probably gaming centric. Beyond that, hard to say. Things like shopping is an interesting one. You're seeing a fair bit of metaverse centric commerce things are starting to happen. We get a bunch of pitches now of we will help Nike set up a store in the metaverse, whatever kind of a thing. I kind of struggle with that because if you want to shop, a two-dimensional piece of HTML on a two-dimensional screen is actually extremely good, and you have a search bar with a keyboard. I don't think you can do better than that. And so until you can rival that experience, I think a metaverse is worse for shopping. So I'm trying to identify things that require 3D space with your friends that are a better experience than what you can do now. And so far, the obvious answer is gaming. Everything else is pretty squishy.
Or concerts.
Yeah.
I think that Snoop Dogg concert actually kind of worked out well. I'm not sure if people want to go to a metaverse concert, but when you can't attend something in real life, it is better than just watching it on a screen, maybe.
Right.
I think that the whole Oculus, and I forget the other Google one, but now that stuff has come out and people can actually interact with things, not just click around on their keyboard and go through a digital world like a Minecraft, we now have kind of other tools that can help bring about that kind of metaverse shift, I think, that are relatively interesting.
Yeah, and in our view, the key to the metaverse is just user self-sovereignty and property rights. Like, you can play games in virtual worlds, or you can play in the Facebook sandbox, and you can have all these walled gardens with that have their own rules. But unless the user is the central focus that can come and go as they leave, own their stuff monetized, kind of have free will domain like we would have kind of synonymous to our meat space lives, right? Like, until we just think this user ownership of goods is whether it's through VR, whether it's through a computer screen, whether it's AR through your mobile device. It doesn't really matter how we get there. I think a lot of people have this vision of we're all going to be Ready Player One style, like lying down in a bed somewhere. But no, I think there's infinite or near infinite ways you can kind of enter or handle the metaverse. But I think really it's having that user ownership of power facilitated by crypto rails that is really the key to it for us, I think.
Yeah.
All right, thank you. Well, we are just about out of time, but we will end this panel 1 minute early. Let's give a loud round of applause to all of our panelists. Thank you.
Thank you, Tracy.